In times of chaos, when markets crash, currencies wobble, and trust in institutions begins to erode. There's one asset class that humans have turned to since the beginning of time: precious metals. And why is that? Why do investors still buy gold and silver in the digital age of ETFs and cryptocurrencies? So today, we're going to dive deep into the world of precious metals: gold, silver, platinum, palladium, and revealing how they serve not just as glittering assets, but as shields against inflation, geopolitical tension, economic uncertainty, and financial collapse. So what the heck are precious metals? They're rare, corrosion resistant, and incredibly useful across industries. Gold and silver are the poster children, but platinum and palladium, they're the powerhouses in everything from automotive to tech to electronics. But here's the cool thing: their value isn't just in the shine and as a collectible, it's in the scarcity and the utility use. From ancient Egyptian times to modern-day hedge funds, these metals have been used for currency, jewelry, and most importantly, as a store of value. In a world where paper money is, well, paper and fake, and printed endlessly, precious metals are finite. That makes them an anchor in your portfolio. Now let's talk about why precious metals, especially gold, are seen as a hedge. Goldman Sachs recently called the best hedge against inflation and geopolitical risk gold. They also said that by the end of 2025, we could see $4,000 per ounce. Here's why. During inflationary periods, paper currencies lose value. Gold tends to retain or even gain value. Look at the real estate crash of 2008. Gold in that year alone went up 25%. In geopolitical crisis, war sanctions, political turmoil, investors run to safety. And historically, gold shines in these moments. Like I said, 2008, gold surged 25%. COVID hit, gold surged 24%. Our Keystone XL pipeline was stopped shortly after COVID. Gold continued to go up. Federal Reserve banks from 2022 to 25 stocked up on a record-breaking amount of gold. But not all gold is created equal. If you're investing, you've got three main forms. You've got physical gold, bars, coins, etc. You've got jewelry, and then you've got ETFs, electronically traded funds. Jewelry is beautiful. Necklaces, bracelets, butt plugs if you're into that. But you're paying a premium for design, brand, and craftsmanship, not efficiency for investments. ETFs, maybe these are a convenience thing, which is why most people are financially illiterate, because we do what is easy. These give you price exposure without actually owning the metal. You can trade them like stocks, fast and easy, but there's counterparty risk, management fees, and you don't own the metal. And the biggest concern to me, take JP Morgan, for example, fined $930 million for manipulating the price of silver futures. See, when you own a stock or you're a shareholder in a publicly traded asset, it doesn't mean that the company is profitable just because you own a stock. It has nothing to do with the company. The company can be losing money, and it's the supply demand with the circulation of that stock that causes the price to go up or down, and it can be heavily manipulated. Just like when JP Morgan got fined $930 million for manipulating the price of silver futures, which they supposedly claimed was backed by physically owning silver itself, but they didn't have enough in the physical asset of silver to rationalize the price. So they got fined $930 million because they got caught. You don't run into that when you own the physical asset itself. So on to physical gold and silver. That's a completely different story. It's yours. No third-party risk, no hacking, just a metal with intrinsic value that survived the test of time for literally thousands of years and hundreds of financial crises. Guys, in a second here, I'm going to deep dive into an undeniable amount of evidence of why gold is such an amazing asset and why it stood the test of time since Jesus' days. Before I do, if you're brand new to the channel, make sure to subscribe. All I do here is expose you to the financial truths that most people do not know about and help you invest like an institutional grade investor without necessarily having to be one, and expose you to all the asset classes that financial advisors don't actually know about that build wealth, allow you to pay less taxes, create more leverage, and truly become your own bank. So let's talk about fact. We go back to biblical days, and the ratio was always between 10 and 16 to 1, meaning 10 to 16 ounces of silver bought what 1 ounce of gold bought. And then we started to regulate the price. We had the Monetary Coinage Act of 1792, which set that ratio at 15 to 1, 15 ounces of silver to 1 ounce of gold. We stayed under that standard until 1834, when we had the Monetary Coinage Act of 1834, and then we changed that ratio to 16 to 1. And then we were backed by gold here in the United States until 1971, when an idiot named Richard Nixon decided to become the petrodollar, which we have not honored all the way to present day. That's why we see people moving back into gold, institutional investors moving back into gold, and because it stood the test of time. Now, moving on, there are risks to owning physical gold. You can keep it in your sock, you can keep it in your drawer. Somebody can come in and say, hey, yo, I'm going to shoot you, and they can steal your gold. You can store it at what is called a depository, where you're going to pay to insure it, you're going to pay storage fees. So there are some downsides to that. Liquidity can be slower, meaning it's very easy to go to a grocery store and just give them $1 of fake money, and they'd rather take that than they would gold, okay? The other thing that you can get into is premiums over spot price, meaning here's a brick of gold, it is worth $3,300, but that's what it's actually worth per ounce, but then the vendor selling it to you has got to make a margin, got to make some money. The U.S. Mint has to make some money. All that packaging and the wax tubes they put it in and put that little green cap on, they got to make money there, so you got to buy that wax shit in that little tube, and now that $3,300 ounce of gold is being sold to you at $3,600. Now, there are ways to avoid that entirely and pay literally the lowest prices on gold, silver, or any physical metal in the entire world, and I will tell you exactly how to do that because I literally do that every single month, and I'll be able to tell you guys how you can buy for record-breaking low prices that you cannot find literally anywhere else in just a couple of minutes here. So what's better? That depends on your goals. Want to know who's been buying a lot of gold lately that you haven't heard on the news? It's not the everyday ma and pa. It's not the everyday investor. It's the institutional money. It's the smart money. It's the banks. They don't want you to know that. In fact, central banks in emerging markets like China, India, and Turkey have been stacking gold at record-breaking amounts. Russia has been buying gold. Third world countries have been buying gold. Why would that be? Because gold reduces reliance on the US dollar, which has historically been the dollar of trade for dozens of years. It provides stability during trade wars and global tension. When governments are hoarding gold, maybe we should be asking why. Maybe we should be understanding that our own government doesn't believe in our US dollar because the United States Treasury says the only tier 1 asset out of the United States dollar is gold, physical gold. Another option on the market is mining stocks. You can get into a mining company stock. Instead of owning the gold, you own the companies that dig it out of the ground. Now, that might sound smart. When gold prices go up, so should the profits. But here's the catch. Mining stocks are just that. They are stocks. They come with all the risks. Labor disputes, operational failures, environmental damage, management problems. Those are just to name a few. And then you have greenies in Colorado where there's a lot of gold that are always protesting mines being opened up and don't allow it to be extracted to begin with. Another thing is they don't always track gold prices one-to-one. In a crisis, mining stocks can drop even when gold rises. Again, it's manipulated. You don't own the physical asset, you own a heavily manipulated paper fake asset. So while mining stocks can offer leverage and growth, they can also offer a lot of risk. A lot more than the metal itself, which has always gone up decade over decade, time after time after time, century after century. So let's just break it all down, and in a second here, I will give you my secrets to investing in gold. So, physical precious metals. It's real, it's tangible, you can hold it. There's no counterparty risk. The downside, you might have storage and security costs. Could be less liquid in large amounts as well. ETFs, the positives, easy to buy, easy to sell, low initial costs to get into. The negatives, you don't own the metal. You don't own shit, actually. Subject to management fees and systemic risk. Mining stocks, positive, potential for high returns, tied to the price of gold, but highly volatile and not a true hedge in a financial crisis. So we've talked about a lot today, but how do you actually choose what's best? This is my not financial advice, but if you're looking for long-term security and protection, especially from currency collapse or systemic shocks, physical metal wins every single time, and it has for thousands of years. If you want flexibility and ease to access, ETFs can play a role, but maybe not your entire strategy. So you're probably wondering, well, Ben, what do you do? What do you recommend? What should I do? Again, this is my not financial advice. I don't own ETFs. I don't own mining stocks. I own bricks. I own coins. I own thousands of ounces of silver and gold. And that's for many reasons. Smart money moves. Intelligent money moves. I was talking with an advisor the other day that said our clients are happy to only lose 8% in recessions. When you keep your money locked up in that 401 for 40 years, you're exposing yourself to, on average, what history has shown to be 8 recessions every 4 decades. I don't need to do that. I don't lose money. I look at history, I look at economic crises, and I go, oh, 2008, went into gold. Oh, 2020, COVID, went into gold. Oh, couldn't go into oil, interest rates were high, wasn't going into real estate or oil, back into gold. It's very simple to make those decisions. So I have grown and grown and grown. I stack that gold, I stack that silver, I have a line of credit against it, and I pay less than anything you would find on the internet. And so the next question you might naturally ask is, well, how and where, Ben? Okay, there's only 27 licensed resellers of the United States Mint. I actually went to one of those resellers. I said, hey, I'm creating a community to teach how to build wealth with hard assets, how to get into oil and energy, how to access off-market deals, usually kept amongst friends and family, and get all the institutional grade wealth building strategies, put it all under one roof, give it to everybody so that they can learn, get the mentorship, and invest alongside these partners. One of these partners ended up being a licensed reseller of the United States Mint, which is an appointed position. I said, I know you already have the lowest prices in the United States, but if I put together a community that then becomes an entity that you can do business with, will you give them even further discounts? They said yes. So when you join the Capitalist Network, you can go to thecapitalistnetwork.com. You're able to literally get gold and silver and all precious metals for lower prices than you will find literally anywhere in the United States. And our members get an even further discount. Plus, you're going to be able to learn how to get lines of credit against your hard assets, against gold. You're going to learn how to get access to institutional grade financial products that advisors don't even know exist, and learn from multimillionaires and billionaires on how to build wealth, get access to all of their deals. That is what I recommend. I love owning the physical gold and silver themselves. I made another video on gold and silver, which I will put in the description as well. Go to thecapitalistnetwork.com, join. We'll love to see you in there. Make sure to subscribe again if you're brand new, and I'll see you in the next video.